Coming up on Business Incorporated today, South Africa contracts companies to import COVID-19 vaccines. Ethiopian Airlines launches high-end COVID-19 testing lab at its hub. Kenya signs trade, transport and security deals with DRC. Hello, welcome to the program. I'm Ladi Williams. We begin the last show for the week with intraday market numbers. Investor sentiments were positive in Africa as the GSE rose 0.18%, while Nigeria's main index was marginally higher by 1 basis point. EGX30 in Egypt closed for the week negative on Thursday, and Kenya ended Thursday's session negative. The Middle Eastern markets closed for the week positive on Thursday. In the UAE, Dubai's index jumped by almost 1%, while the Abu Dhabi index advanced 0.67%. Elsewhere in the Gulf region, Saudi Arabia's index rose 0.38%, while the Qatari index was marginally higher by 0.05%. And European stocks were little change on Friday as global stocks searched for direction at the end of the week, with investors monitoring a slew of economic data and corporate earnings. Let's cross over to Frankfurt now with Ashdus Pandey standing by. Hello, Ashdus, great to have you. The Eurozone Composite Purchasing Managers Index rose slightly in April despite extended coronavirus lockdown. That's quite surprising, isn't it?
It is a bit of a surprise because you mentioned those restrictions were there and the consensus was that it is going to fall, but surprisingly it has come up. But what is not surprising is the fact that in the past few months we've noticed that these purchasing manager indices have actually come in better than what the actual performance has been. So they've been overstating the activity of late. So we have to keep that in mind. But if you just go by the numbers, it's definitely a positive sign. The manufacturing sector is doing really well. In fact, the factory activity is at record levels. So that's a positive. Services are also growing. That's again a big surprise, given that most of the restrictions are affecting the services sector. But since retail is not part of these of this index, and that's the reason why we see that there is an expansion there as far as services is concerned, because most of the restrictions so far have been impacting the retail sector. So that's actually a big point. One of the things that has come out from this PMI today is that the prices, the producers' prices are going up, and that means that we could expect inflation, but because eventually they would be in a position to transfer those extra costs to consumers. But there are some analysts who feel that they won't be able to do that, considering that there is not enough demand for goods at this point in time.
All right, and U.S. President Joe Biden is reported to be planning to almost double the capital gains tax rate for wealthy Americans. How have the European markets reacted to this story?
Well, it certainly weighed on sentiments, but we didn't really see any major sell-off because of this story. And that's predominantly because there are many aspects of this plan which are still not clear. We don't know if there would be any exemptions like for certain class of taxpayers or business owners. When would this plan come into effect? And the biggest question and the biggest doubt is whether it would be able to clear the Senate in its proposed form, given that Democrats really have the slimmest of majority there. And this is why we didn't really see a big sell-off, because I think investors are actually ready to wait and watch as to how it develops. However, in Bitcoin, the cryptocurrency space, we did see a lot of movement, and Bitcoin fell below that $50,000 mark, and that's because there are concerns that perhaps these high capital gain tax could perhaps curb investments into digital assets.
Yeah, quite interesting there. Bitcoin taking the major blow today. Well, let's look at the auto industry. Mercedes-Benz car maker Daimler has raised its profit outlook for 2021 after recording a big jump in the first quarter profit. How's the stock doing now?
Well, it's among the best performers on DAX. And that's predominantly because of that strong outlook, despite the fact that Daimler warned that the chip shortage could weigh on its sales in the second quarter. But clearly, investors are looking really far off from now, and they've been actually warming up to the company for quite some time. The share has been one of the best performers over the past 1 year. As far as DAX is concerned, the stock has risen 160% in the past 1 year and is now trading at its 5-year highs. Investors are happy about the direction of the company. Its focus on electric vehicles, the future of mobility, and that's what they're happy about. They're also happy about the fact that Daimler is looking to spin off its truck unit to focus more on cars, and which are really high margins. And that's again a positive that they're looking at. Strong sales, especially in China, that is giving them confidence. And as far as the chip shortage is concerned, while Daimler has warned that it will weigh on its sales in the second quarter, there are some analysts who feel that, in fact, this gives more pricing power to Daimler and other automakers, the shortage, I mean. That's because they say that while there is still a strong demand for cars, at the same time, the inventory is running low, so that would give them more pricing power. So, yes, and these are the aspects that investors are clearly looking at.
All right, we'll keep tracking that stock. Anyway, Ashish, thanks for the update. Enjoy the weekend.
Thank you.
And stocks continue to slide amid a surge in coronavirus infections in India and Japan, and fears over the impact of mooted capital gains tax hikes in the U.S. FTSE 100 was also affected. That was down in early trade today. Let's talk to Juliana now for updates from London. Juliana, how are the markets in the UK looking this intraday with the flurry of news making the rounds?
Good afternoon, Laddie. Well, it looks like the FTSE is going to be heading into the weekend in the red. It started off that way and it's still firmly in the red at intraday. This is despite positive data coming out from retail showing that retail sales surged in the month of March by 5.4%. This follows a 2.2% surge in the month of February. Really good data because in the month of March, non-essential stores were still closed. So I think the entire sector is hoping that once next month's data for this month comes out, there will be a significant rise. As you were saying, there's lots of global sentiment, but closer to home, the Office for Budget Responsibility showed that in the last financial year, the public sector borrowing was over £300 billion. We all know, of course, that's because of COVID. So many different schemes that the government have been pummeling, the taxpayers' money into to try and keep the economy afloat and people's bellies fed. This is compared to a previous year where it was below £254 billion. So it's significant, and we are going to expect tax rises in the years to come. So to have a closer look at the numbers, the all-share is down 0.30% at intraday. The FTSE 100 also down by 0.51%. And the FTSE 250, the domestic market, that's down 0.45%. In the currencies market, the British pound is up on the US dollar by 0.30%, unchanged against the euro, and the British pound is up against the Japanese yen by 0.23%, Laddie.
All right, and today climate activists are at the Lloyd's headquarters in the City of London. How's Lloyd's management reacting to this?
Well, interesting story. We've been speaking about the climate change group, the pretty controversial climate change group, Extinction Rebellion. Yesterday, they were smashing windows in Canary Wharf at Europe's biggest bank, HSBC. Today, it's one of the world's biggest insurance companies, Lloyd's. We have a statement from Lloyd's which says we're actively involved in constructive engagement on the issue of climate change and continue to explore the ways in which Lloyd's can support a responsible transition. They also said that they are asking its members to stop providing new insurance cover for thermal coal, oil sands, new Arctic energy exploration. It's obviously part of a much wider discussion. Yesterday was Earth Day. The US President Joe Biden did host a new kind of platform. I wouldn't say it's similar to what we saw in 2015 with the Paris Climate Accord, but they're certainly trying to make sure that the world's most dirtiest, polluted economy companies try and get their houses in order and make sure that they are transitioning into a much cleaner, greener economy. Obviously, Extinction Rebellion and other environmentalists do not feel that governments and these big corporate giants are doing enough, which is why they're staging these protests, much to the anger of staff who are at the cities. I'm not sure whether or not police have been called, but what Extinction Rebellion did today was pour a big lump of coal outside of Lloyd's office in the city centre.
Oh, that's a big one there. Well, dozens of former sub-postmasters have had their convictions for theft and fraud and false accounting squashed by the Court of Appeal. Some have called it England's biggest miscarriage of justice.
Yeah, this is a massive, massive story, still breaking because I believe the High Court just ruled about an hour ago, but it is going to have massive consequences. It goes back to a few years ago where hundreds of staff who were working at different postal offices across the country were accused of theft, they were accused of fraud, and that's because there was a significant accounting error in a computer, a Fujitsu computer that the post office was using. A lot of these individuals actually were sent to prison. Some of them were receiving community orders. Some have died. So unfortunately, they didn't get to see this justice being carried out today. So it has been called an absolute significant scandal. I believe the judge did find out that during the time, the post office and bosses at the post office actually hid the discrepancies that were being done by this computer, and they knew that the staff were innocent during the court case. So absolutely, it's a huge, massive scandal. Of course, what we're expecting is there to be a big payout for these individuals. Of course, if you've been to prison, I believe there was a lady who was 8 weeks pregnant at the time. She was sent to prison for 18 months when she was innocent, and she pled her innocence, but she still had to do the jail time. So yes, you're right. It is a big miscarriage of justice, probably one of England's biggest. And hopefully next week, once more of the detail comes up, we'll be able to update you.
All right. Thanks for the update, Juliana. We'll keep tracking that. Do enjoy your weekend.
I will. You too.
And stocks in Asia Pacific were mixed on Friday, with the price of Bitcoin tumbling below $49,000. The Nikkei 225 in Japan fell 0.57% to close at 29,020, while the Topix index shed 0.39% to finish the trading day at 1,914 points. Earlier during the session, Nikkei 225 had fallen more than 1%. And South Korea's Kospi closed 0.27% higher at 3,186 points, while Hong Kong Hang Seng Index advanced 0.85% as of its final hour of trading. Mainland Chinese stocks nudged higher on the day, with the Shanghai Composite rising 0.26% to 3,474 points, while the Shenzhen Component gained 1% to around 14,351. Shares in Australia edged higher as S&P ASX 200 climbed fractionally to close at 7,060. MSCI's broadest index of Asia-Pacific shares outside Japan gained 0.59%. And futures contracts tied to the major U.S. stock indexes were higher in early Friday morning as investors prepared to end a down week for equities amid concerns the White House could seek a hike to the capital gains tax. S&P 500 futures were slightly higher, while contracts tied to the Dow gained 7 points, and NASDAQ 100 futures were marginally higher. The after-hours moves came following a turbulent session for equities after multiple news outlets reported Thursday afternoon that President Joe Biden is slated to propose much higher capital gains for the rich. And we'll bring you more stories from the African continent in a moment. Do stay with us. Welcome back. You're still watching Business Incorporated. In recent years, there has been increased regulatory scrutiny of global supply chains, especially those involving commodities producing emerging markets like Africa. And this is putting a spotlight on West Africa's producers and traders of oil, gas, cocoa, coffee, and palm oil. Moves are underway by the EU and US government to improve scrutiny and boost transparency in the supply chain. What could this mean for West Africa? Ted George, the Chief Narrative Officer at Clio's Advisory, joins us to provide answers to this and more. Thank you for joining us, Ted.
It's great to have you. Thanks a lot.
Yeah. So first off, how transparent are commodity value chains in the region?
Well, I think the problem is not at all. We have billions of dollars worth of goods and commodities and millions of people involved in the value chains in West Africa, and most of it is very fragmented. So there are some big companies which have integrated value chains and they can really see what's going through them. But even if you take the case of cocoa, somewhere like Côte d'Ivoire, over half the cocoa is bought by individual middlemen and aggregated. Most people doesn't know where it comes from. And that means monitoring things like forestry protection, child labor, forced labor is very, very poor. And so, you know, there really needs to be a sea change in the way that some of these supply chains are managed in Africa. Otherwise, they won't be able to trade internationally.
So what are the EU and the US government proposing, and how could this affect West African traders?
Well, it's pretty radical what they're proposing on paper. Of course, in practice will be different. But the European Parliament voted in March for the Commission to produce a law which would basically require everyone to fully monitor their supply chain. And there must not be any child labor or any impact on human rights abuse or environmental damage. And then the US Customs and Border Protection have introduced legislation that says no goods can pass the US border if it involves forced labor. So if you look at West Africa, commodity sectors like cocoa, palm oil, there's a lot of concerns about these issues in those sectors, and they could be affected, those flows going into Europe and North America.
Well, talking about child labor, but what needs to be done to ensure, you know, West Africa can remain part of international supply chains? Because it's not easy to actually monitor how they choose their workers at this point.
Absolutely. It's so fragmented, the value chain. I think tech is the key, technology. If you're trying to monitor things, you want to have as little human involvement as possible. But if you can be using satellite data, drone data, data from mobile phones and information collected that way, and analytics, you can really see where the problems are and then address them on that particular point. But I think also one of the real key things here is cross-border value chains. It ties into the whole thing with the Africa Continental Free Trade Area. But if you have cross-border value chains, you can set standards which go along the whole value chain. And that is what actually stamps out the problems. We have some value chains which are perfect right up to the point when you get the produce from the market. So if we can get right back to the tree itself, that's when I think across the borders as well, there is a chance for proper transparency in these value chains.
Right, but how could this affect efforts to integrate West Africa into AfCFTA?
Well, I think there is definitely going to be a big problem there if it's seen that, for example, someone's trying to extend a value chain run by an international company into another country where, let's say, there are concerns over deforestation or forced labor. So it really does mean that there's going to have to be a lot of thinking about how we link this all up. But there are so many of the commodities that West Africa produces, it's minerals, but particularly soft commodities, which are needed by the international market. And there's a lot more opportunity to get value out of them. For me, the real bonus that comes with transparency is you know who it is who's working the value chain. And that gives you a much better chance that West Africans will get paid and get a lot more value out of their commodities than just exporting them raw.
Well, transparency is actually key. Anyway, Ted, thank you so much for your time today, and do enjoy your weekend.
Thanks very much. It's good to be back.
Thank you. And South Africa has, for the first time, contracted private companies to help with importation and distribution of COVID-19 vaccines as it seeks to step up vaccination nationwide. The Department of Health says the government has awarded tenders to state-backed Biological Vaccine Institute of Southern Africa and Imperial Logistics to import an unspecified quantity of doses, while DSV Healthcare was contracted to store and distribute the doses countrywide. On April the 26th, BioVac will handle delivery of South Africa's first batch of 1 million Johnson & Johnson shots being introduced locally by Aspen Pharmacare Holdings. An Ethiopian Airlines group has joined hands with BGI Health Ethiopia, a subsidiary of China's biotech giant, to launch a high-end COVID-19 testing laboratory at its main hub and the continent's busiest airport, Addis Ababa Bole International Airport. The Testing center is open to revitalize the passengers business by creating seamless travel experience that includes COVID-19 testing to passengers that are departing or transiting via Addis Ababa. The COVID-19 testing lab is equipped with technologies to provide quick and accurate testing and passengers, and currently has a capacity to carry out 1,000 COVID-19 tests a day with a potential to grow further after expansion. Regular test results can be obtained within 3 hours, leading to a convenient travel arrangement by reducing waiting time for testing and result collection. And Kenya has signed a crucial agreement on transport security and trade with the Democratic Republic of Congo, signaling a push to improve low figures of business between them. After a bilateral meeting between President Uhuru Kenyatta and his host Felix Tshisekedi, the two sides signed a new deal to handle cargo from the port of Mombasa that grants the DRC certain privileges for using Kenyan facilities. Kenya also offered to open diplomatic outposts in Goma and Lubumbashi in eastern DRC, and what President Kenyatta said would ease consular services for trade. The agreement on maritime freight management, revised from earlier arrangements, will be the basic legal framework in handling all freight cargo coming through Mombasa destined for the DRC. And oil prices rose in early trade on Friday in hopes of a fuel demand recovery in the United States and Europe as economic growth pick up and lockdowns ease, but worries about India's raging second wave of COVID-19 cases kept a lid on gains. Brent crude futures rose 0.3% to $65.61 a barrel after climbing 8 cents on Thursday, while U.S. West Texas Intermediate crude futures jumped 0.5% to $61.72 a barrel, also after an 8-cent gain on Thursday. Nevertheless, both benchmark crude contracts are headed for a weekly loss of nearly 2% on concerns about sliding fuel demand in India, the world's third-largest oil importer, where daily infections and deaths from COVID-19 hit new records this week. Several countries, including Australia, Britain, Canada, and the United Arab Emirates, have barred or cut flights from India. And that's it on Business Incorporated and for the week. Thank you for watching. I'm Ladi Williams. Bye for now.